What's going on, guys, and welcome back to my YouTube channel. My name's Antonio, and in today's video I'm going to be breaking down two trades that I've taken on USDCHF and GBPJPY. I'm going to be breaking down my entry, my trade management, and my exit. But before we jump into the video, make sure you hit that subscribe button so you don't miss any more content. And for those of you who want to learn exactly how I trade, I now have a mentorship group that's open, and I'll leave the link in the description below. But for now, let's jump straight into the video. Right, guys, so here we are on the live charts, and I'm going to be breaking down how I took my trades today on USDCHF, which is this chart, and also GBPJPY, which is the next chart, which we'll go into after. I'll show you the positions I'm currently in. So this is USDCHF and GBPJPY. Running quite nicely in profit right now, and I'm going to show you guys exactly my reasoning behind why I took the trade and how I'm going to manage it, and also how I'm going to look to exit the trade. So let me just delete my analysis and then we'll come back to it right now. So essentially with USDCHF, what I've been looking for is a shift in market structure, which we've clearly had, thanks to news as well last Friday from NFP, where we had this huge move down. It's kind of given us our bias, but essentially what we've seen, we can clearly see how price was uptrending, right? From down here, we've been uptrending, forming higher highs and higher lows. And it looks like this kind of push we had here, let me just highlight it. This push that we had was the last final push from buyers. This is the last kind of bullish impulse move that we've seen. As you can see, we haven't really had one since. So this to me was kind of the last final push from buyers, where buyers then looked to step out of the market, okay? And then from there, we kind of consolidated for a bit. So this level here, you can see how we move sideways. So that's basically a decision making in the market. Neither buyers or sellers are active. So essentially we're in stalemate right there. And then what we saw a nice push to the downside, followed by a correction, followed by another push to the downside. Okay, so we're definitely bearish now. Sellers are driving the market down, and that's exactly why we are, looking for those sells now. So what can we see? First thing I can see here is a nice head and shoulders pattern. It's tilted, but it's still a head and shoulders pattern. The principle is the same. If I just draw, for example, this through here, and then I can even just copy and paste that and use that as the neckline through there. We can see how this side over here is the left shoulder, and then let me copy this. This side over here is the right shoulder, and then up here we've kind of got the head. Okay, so we've got like a head and shoulders pattern, where this is obviously a bearish reversal pattern. So from the left shoulder, we saw a nice push to the downside, and then we are seeing this correction to the upside. And right now we're looking for that continuation move. Okay, so the way the market likes to move is in two different phases. Okay, we get nice impulsive moves to the downside. This is for sell positions. And then what we're looking for is we're looking for bullish corrections. And then at the end of the bullish correction is when we're looking to enter our sell position to catch the continuation move. Okay, that's what we're looking for. And that's exactly what we've had here. Is we've had the bearish impulsive move, and then we've seen price correct to the upside. But how do we know when the correction is over? And that's why we add other confluences such as, support and resistance levels, Fibonacci tools, to be able to tell when to enter the market and when the correction is over. So what we're going to draw now is a nice level of support. Okay, so this is our most recent support within the market. So I'm going to draw this level through here. So this is our most recent support. Okay, and as you can see, most recent support has turned and has now been used as resistance. However, why didn't we enter the market here, or here? And where are we putting our stop loss? Where are we looking to enter? And that's the key thing. Okay, so I'm going to draw on the Fibonacci retracement tool now from swing high, drag it down to swing low, and we can see how we actually did touch the 50% Fibonacci level. Okay, so what is this telling me? This is telling me that there's a lot of people entering the market too early. And this is how I like to trade. I like to basically get in after people have been stopped out. Okay, the good thing about trading is, it's never too late to enter the market. And most of the time, being patient and entering the market later can actually work in your favor, and you can actually basically reap the rewards whilst other people are getting stopped out. As bad as it sounds, that's just how trading works. People are getting stopped out, and then you're taking advantage of them getting stopped out to then enter the market and catch the move. So bring your attention over here. We can see there's a lot of kind of candlestick patterns that are going to make people want to enter a sell position. So we've got I'll highlight it here. So we have this right here. We have this nice kind of bearish candlestick pattern where we had a bullish candle followed by a bearish candle, then a huge bearish engulfing candle. Okay, so you got to ask yourself, how many people are entering a sell position there? There is a lot of people who are entering a sell position after that candle like this. And then where are they putting their stop losses? They're putting their stop losses just above the highs. That's how people look to enter these markets, and obviously targeting down here. So their stop loss is just above there. So what happens next? They then get stopped out. Okay, they're being stopped out. They're being stopped out multiple times. And then once again, we have a bullish candle followed by a huge bearish engulfing candle. Let me highlight it one more time over here. As you can see, bullish candle followed by a huge bearish engulfing candle. Okay, how many people are entering the market there? Once again, let me highlight it. People are entering the market, putting their stops just above. Okay, so they're doing this and they're putting their stop loss just above. Now, I'm not saying that it's bad to enter the market there. You just need to be aware that the market can pull back higher, and you need to know, well, where do you need to put your stop loss in this instance? And the way I do that in this scenario, well, first of all, we have this level of previous support as resistance. Okay, so we definitely want to be putting our stop losses above this level. But also, if I just edit the Fibonacci retracement tool and I put on the 61.8, which is known as the golden level, we can see how that is literally just above here. It basically lines up with this level of previous support. Okay, so we definitely want to be putting it above the 61.8. So it's okay to enter here. You can enter off that bearish candle, but potentially you're putting your stop losses too tight. You want to be putting it above the 61.8. So all I done was I just waited. I wasn't kind of on the charts at this time. It was in the evening. I waited for the next day, and then around 10 o'clock, 11 o'clock, the following day, I saw how price once again would have stopped all of these people out, pushed higher. And then I started to see the bearish momentum kick in. And that's when I looked to enter the market. Okay, I'm not looking for no special candlestick pattern or, there's no real entry criteria. I'm just waiting for people to get stopped out. I'm waiting for highs to be taken. I'm waiting for price to kind of approach key levels in the market, which is this level here. And then I'm just entering and putting my stops in a safe place. Your stop loss needs to be in a place where if price goes to that level, then you don't want to be in the market anymore. Essentially, price is not bearish anymore. So that's why I've put it above the 61.8, because if it goes above there, I'm not looking to be in the market anymore. Whereas these people who are into sell positions here, if they get stopped out by having their stops too tight, I can guarantee you they would still want to be in the market here. But anyway, going on to the position, we're currently floating at around a 1 to 1.5, and targets are this low point here. I do believe it's going to get hit with ease, purely because of the fact that, the moves that we're generating. So if I just measure this move here that we had, it's a huge move to the downside. And if I drag that to here, realistically price should be coming down to this level. The reason I'm not going to be targeting all the way down here, that's a 1 to 6. This is like a 1 to 3. I'm more than happy getting out of the market with a 1 to 3. Some people, I'm not saying you don't have to, but if you wanted to, you could definitely target lower. But for me, for this trade in particular, I'm happy to take a 1 to 3 and call it a day. Looking at USDCHF on the higher time frames as well, we are, potentially looking bullish. If you looked at my previous analysis on Instagram and on the higher time frames, we are definitely looking bullish. But essentially, I'm looking to get out a 1 to 3. The way I'm going to manage it as well, with like stop losses, for example, if price starts to kind of form structure where we like pull back a little bit and then we like move down like this, I'll then just look to move my stop loss above this high here and, trail stop loss with price action. Another thing to note as well, I'm currently at break even because we've kind of had this push now. I don't want to see this winning trade turn into a loss. So my stops are covered. So this is a risk-free trade now. We're at break even, and, I'll update you guys of how this goes, but it's looking good so far. But like I said, I will update you guys. But let's go to GBPJPY now, and I'll break down the trade on that as well. Right, guys, so here's the trade on GBPJPY, and I will show you the position as well. So you can see the position there on GBPJPY, and now I'm going to be breaking down, the reasoning why I took this trade. So once again, I'm going to delete all my analysis. It's very, very simple, this trade. So like I said, you know, I do like to keep trading very, very simple. You don't need to overcomplicate things. It's simply just pure price action, key levels, market phases, and then, you know, you're just pulling the trigger and going with price, and then whatever happens, happens. So what's the first thing you can kind of notice on GBP/JPY? Well, it's definitely clear that we are bullish. We're forming nice bullish impulsive moves followed by correction. So like on USDCHF, where I said when price makes bearish impulsive moves, you're looking for that bullish correction, for that continuation down. It's the complete opposite now with GBP/JPY, where we've now had bullish impulsive moves and we're looking for that bearish correction for that continuation, okay? And that's exactly what is going on this chart. You can see how we've had, you know, huge bullish moves to the upside, huge bullish moves to the upside, and then price is correcting to the downside in between, okay? So we're waiting for the end of this correction to happen to then look to enter the buy position for the continuation. That's exactly what we have had here. However, this one's a bit different, and I'll tell you why. Because, you know, if we kind of drag the most recent resistance level, which is here, and we drag that across, you can see how we haven't actually come down to this level, but there's a reason for that. Price doesn't always come down to retest previous resistance as a support. Sometimes, because the trend is so strong, we'll actually pull back to other areas in the market, or, you know, do some liquidity sweeps or something, which I'll break down now. So sometimes, you know, waiting for price to come all the way down, it's not actually the key. You need to be looking at price and see what happens before that. Let's see what levels we do have. So if I drag from swing low to swing high, you can see how we did tap the 50% exactly. And that was the reasoning for my entry, the fact that we tapped the 50%. However, the reason for this entry is because if I just make this a little bit bigger for you guys to kind of look at. If you notice this, we can see how price formed retail traps. And this is what I love about trading, okay, is noticing these traps, noticing where people are entering the market too early and then taking advantage of it, just like USDCHF. We've done the exact same with GJ today. So I'm going to highlight some support levels in the market, okay? So we can see that this is a support where price moved to the upside from. We then pulled back and we retested that exact same support level. And then what did we form? We formed what the textbooks would call a morning star candlestick formation, okay? That's a morning star candlestick formation. So once again, my question to you guys watching this is, how many people, or even you guys, how many of you would have looked to enter a buy position at this level? You look to enter a buy position, and where would you be putting your stop loss? Right below the low point, okay? So people are entering there. Price is moving to the downside once again. And then what happens? If I drag this across, they all get stopped out, and then price continues in the desired direction. So what am I doing? I'm waiting for that to happen. Notice how we didn't tap the 50% here or here. We've stopped people out. We've tapped the 50% Fibonacci level, and then we've entered the market based off of that. Okay, prices grabbed liquidity, stopped people out, and now the desired move is happening. Okay, it's happened at a good time as well. London session, going into New York, the volume picked up, and we've broken now completely out of this kind of corrective move that we've had. Okay, we're now moving to the upside. How am I looking to manage this trade? So first of all, my targets are this high. It's looking for a nice risk to reward of around 1 to 4.7. So this resistance that we do have up here, that's where I'm looking to target. Once again, we should reach that level with ease, because if I measure this move that we've had and I drag that to where the move just started from, it goes all the way up. So it should hit this level with ease. It's not being greedy. It's not being, trying to squeeze as much of the market as possible. It's a very relatively safe and conservative level to get out of the market. And once again, how I'm looking to manage it, my position is at break even. As you can see, we're running now probably around 1 to 2, 1 to 2.5 or something. But, price is unlikely to just go all the way up to there. I am going to look for price to potentially, pull back, create some structure, and then continue like this. That's what happens sometimes. And then I will look to drag my stop loss and trail it with price action as we go up like that. Okay, that is how I'm going to look to manage it. And I'll update you guys of how that goes. Let me just quickly show you as well how it was sent into the group as well this morning. So let me go to here. This is the USDCHF one. some key analysis there if you guys wanted to screenshot that. And then also my GBPJPY one was sent in the group as well for people to take advantage of, and that's the trade before. And then USDCHF is there as well. So sending in the analysis before it happens, the reasoning behind it, where I'm looking to put my stop loss, why, where I'm looking to put my targets, and then how I will manage the trade as well. But yeah, guys, I will update you with how this trade goes. It's looking good so far. But yeah, like I said, I'll update you with the outcome of this trade. Right, guys, so the trades are finally over. As you can see, we're on GBPJPY. We did move to the upside. We had a little correction where we could have potentially entered another position in the market. As you can see, price is kind of forming this, what would we call it, almost like a flag pattern. We formed a resistance. We were retesting previous levels of resistance as a support, and then price continued to the upside. But obviously this happened overnight and yesterday evening when we was off the charts. So there's no kind of time to enter another position, but stops were trailed to below here. Let me just highlight it, below this level after we made that push. But as you can see, we've reached our take profit level, and I'll show you now the position. So that's GBPJPY, nice trade on that. We'll go to USDCHF now. Now USDCHF, we've closed manually. If you guys can see this, we can see that, you know, we have been correcting to the upside. We did move to the downside. I just don't like how we are pulling back. And, you know, with this currency pair as well, on the higher time frames, we are also bullish. So I'd rather just get out now at, you know, just a little bit of profit, break even. If we do kind of form some kind of pattern here where we move to the downside, we might see, you know, like a head and shoulders pattern here. It could be taking place. If I just highlight this, we might be forming something like this, like a mini version of a head and shoulders pattern. And then we might see something from here move to the downside. So we'll see what happens. But in terms of, for this video, this is a break-even trade. GBPJPY was a winning trade. All in all, both very good trades. I hope this analysis was helpful and the trade management and the exits were helpful, but we will now go into the outro. Thanks for watching this video, guys. If you liked it, make sure to leave a like and a comment letting me know your thoughts. And once again, if you're not already subscribed, make sure you hit that subscribe button so you don't miss any more content. If you want to join the mentorship group, just click the link in the description or simply send me a message on Instagram and I'll get back to you as soon as I can. Have a great rest of your week and I'll see you in the next video.